Welcome back. Now, Greaves Cotton is the first management on the show, and it was a good quarter for the company. The profit surged over 64%, while the margins, though, were flat. And we have Akhila Balachandar, who is the CFO at Greaves Cotton, who is joining in to discuss the road ahead for the company as to what lies ahead for it. Akhila, good afternoon. Thank you so much for joining in. Take us through the quarter gone by. Your engineering business revenues were up 14%. On the top line front, you have done fairly okay. Your profits were also up, but the margins were flat at around 5%. Do you see them improving in the current quarter, which is the fourth one, or do you see an improvement coming in FY26?
Thank you and for taking me on the show, and a very good afternoon. We've reported a very healthy quarter. For the quarter, GCL, we had a standalone revenue of 500 crores, up by 13%. 9-month consolidated, we have reported 2,096 crores, which is again a fairly good achievement of ours. On the margins, GCL plus Excel, the company we acquired in May 23, we have reported a healthy margin of 14.4%. We are lower compared to Q3 last year.
Akhila, sorry to cut you in. We have the numbers with us. I was just asking you about the margin picture. The 5.5% margins that you reported this time around. Do you see them improving in the ongoing quarter, which is the fourth quarter, or do you see them improving in FY26?
Yes, that's exactly what I'm trying to say. If you see our journey over the last few years, we have been reporting margins at this is GCL plus Excel. Consolidated, our numbers have been flat, but at the standalone company, our margins have been improving, and we are in the range of 13 to 15%, which is what I have mentioned in the past, and we continue in that journey at 14.4%.
All right, that's about the standalone business. But everyone is excited about the value proposition in the e-mobility business. While they're excited about it, there is also this concern with regards to competition out there. When you guys started selling your EV two-wheelers, three-wheelers, mostly two-wheelers, y'all were doing extremely well in that segment. One wants to know what the market share is right now, given the larger players have come by as well. You have, the likes of Bajaj, TVS, Ola, all of them saying that they are gaining market share. At what cost? I mean, are they gaining it from ICEs? Are they gaining from people like you? What was your market share earlier? What is it now? If you can comment on that. And at the same time, give us a path to profitability for your EV business.
Sure. I'll put few points. But as you know, we have filed for the IPO and the DRHP. So I will be limited in my comments. In terms of December, we have actually increased our market share given the new launches that we have done, the NXG and the Magnum Neo. And we believe that basis these new product launches and a couple of more products that are in the pipeline, we are good to regain our past glories.
Could you give us numbers of where does the market share stand at? What was the past glory? What was the dip?
So if you remember in Q4 of FY23, we were at an 11% market share. And given the FAME subsidy matters over the last year, we've had our challenges. Currently, with all that behind us and the new product launches, I think we are set up for a robust future.
What is it now? What is the market share now? Akhila, what exactly is the market share right now?
So in December, we were at 4% market share.
Got it.
Yeah.
So 11% has fallen to 4%. You believe that it will continue to grow higher from here on. And the path to profitability and the timeline for the IPO of the same, you said you've filed papers. If you could give us a sense on by when can the street expect the IPO to hit the road?
Sure. So we've filed the papers and the response from SEBI is expected. So I will be able to come back to you at an appropriate time on that.
The e-mobility business as of now for the consolidated entity is around about a quarter of your overall business. Do you see that share, the mix improving as we go ahead, as the mobility business grows as well? Do you see that reaching upwards of 25 or 30% sometime by FY26 or say 27?
I would like to mention that, we have gone on our diversification journey from a single product, single fuel to fuel, fuel agnostic, and diversified our revenue streams. The endeavor is to ensure that we are not reliant on any single source of revenue, and we have a highly diversified revenue stream. I think we've done well on this journey, and that is where we are on the path forward.
As of now, what exactly is the holding company's shares or shareholding in the EV business? And what is your dilution during the IPO likely to be in a range? We're not asking for specifics because you're obviously not able to answer that legally. But if you could give us just a rough range for the street to understand.
As I said, the IPO process is underway, and we will be able to come back with more details at an appropriate time once all the regulatory approvals and processes are received by us.
But it is mostly likely to be an OFS itself, right? Or you are looking at some fresh capital too?
Well, all the details are in the DRHP, and there is definitely fresh capital to be introduced into the company.
Clubbing two questions into one, Akhila. One was about the energy solutions business, which grew about 20% on a sequential basis. Do you see that level sustaining? And the other one being Excel, where exports were about 28% of the contribution. Do you see that sustaining as well? Or do you see a normal range that you're working with over the next 12 months?
Exports is one of the focus areas of the company. Currently, our overall contribution of exports to the revenues is less than 10%, and we would aim to grow to around 20% plus over the period of time. Excel, 28 to 35% has been the range of exports over the last few years, and that is something we are very focused on continuing.
All right, and final question then for FY26 on a consolidated basis, what is the kind of revenue projection that you have given all your diversification plans and the plans of looking at improving your operational performance too? So roughly, what are the kind of margin bands that we should look at and revenue growth prospects for FY26 on a consolidated basis?
Well, I will not be able to give forward-looking guidance, but if you take our history over the last 8-10 quarters, GCL plus Excel, we have maintained margins in the range of 13 to 15%. And given the various initiatives that we are undertaking, I think that is a range we would target to maintain and grow onwards.
And e-mobility, when does that become profitable? What's the path there?
Being a IPO, the DRHP, I think legally I will not be able to comment beyond at this point in time.
All right, Akhila, thank you so much for sparing time joining us today. Wish you good luck for the road ahead and, of course, for the upcoming IPO as well. The management there of Greaves Cotton on the road ahead. Time for a short break. Up next, we focus on our special segment, Quarter Se Quarter Tak, to decode what to expect from the auto sector in the current quarter. Stay tuned.